What's going on, Blue Line Traders? I'm Sean, the owner of Blue Line Trading, and today we're going to talk about a very popular indicator, and that is the RSI indicator, which is the Relative Strength Index. So we're in our charting software, and we're on the SPY on the daily chart, and at the bottom is the RSI. And the typical way most charting books that you get off of Amazon or videos on the internet are going to tell you a pretty general way of using RSI, and that is for overbought and oversold conditions. They will tell you when the RSI gets up into overbought territory, it's time to sell, and when it gets into oversold territory, it is time to buy. And when you look at what I just showed you, if you had sold right here or went short, if you sold, you would have missed out on this, and if you went short, you would have stopped out when it came back up. Same thing goes for this other example that we showed you. Price comes down, goes into oversold territory. If you buy here, yes, you can make money if you know where to exit the chart, but if you are not using price action and you're solely using this, you would have probably stopped out as it came down and did not make a new low here, but the price action did. So clearly, yes, it will tell you oversold and overbought conditions, but using that for trading is probably not the best idea based on what I just showed you. So to better explain why that's not a good idea, I'm going to show you next what an indicator actually is. So when we pull up the definition of an indicator, the dictionary states that it's a thing, especially a trend or fact, that indicates the state or level of something. So based on that, what it's saying is this RSI is telling you something about the price action here. And that something is momentum, because this is a momentum indicator. So when we look up the word momentum, what we get is the quality of motion of a moving body measured as a product of its mass and velocity. So based on those two things combined, the RSI is telling you the health of the momentum of the movement you're seeing. Nowhere in there is it going to tell you where the market's pivoting. And in fact, no indicator will really guaranteed tell you where the market is pivoting. The only thing that's going to do that is price action. And that is why here at Blue Line Trading, we use price action to forecast the market combined with market theory, and then we use indicators as confluence and evidence to support our theories and forecasts. We do not use them to make trading decisions. So to show you how we use the RSI, I'm going to briefly explain an entry and exit signal that we use that's related to price action pretty often, and that is support becomes resistance or resistance becomes support. So I'm going to grab the drawing tool real quick and show you what I identify as an important level on this SPY chart, and that is this level right here. You can see that price action came down, treated it as support, bounced off of it, then broke below it, back tested it, and then went down further. Here we came up, we tested the area, rejected it, maybe even had a false breakout, and then fell back down even lower. Here we came back up, we tested it, came back, and now we're testing it again and attempting to break through it. So if I was going to use this as a trading signal, we come down, we establish that this is support, and then we break it. On the back test of this area, that is your short signal. And that would have been a profitable trade. Coming back up, we broke the level, but then we failed. Failed breakout, we fell back below, back tested it, short entry signal. This would have been a very profitable trade. So that is how support becomes resistance and resistance becomes support signals work. So the question you should be asking yourself at this point is, based on using that signal in this level, how would we use the RSI to support a decision to make an entry? And the first thing I'm going to do here is we'll use this example right here and we'll use this example right here because we have a pretty clear trend in both situations. And what I see is a pretty clear trend line. You have that one, and then we also have this right here. So once you have your trend lines drawn, the next thing you want to do is you want to look at these areas. And you're looking for two different things here. The first is what is called bearish divergence. And that is where the price continues to make new highs while the RSI fails to make new highs or hits resistance. And we don't really have it in this case right here, so we'll come back to this example in a minute. But here, we definitely are hitting resistance on the RSI in this zone. You can see we put in a high right here, put in a high on the RSI, we pulled back, we put in a pretty substantially new high in the price action, but look at the RSI, it barely moved up. Same thing with the following two highs. That tells you that this momentum is losing steam. And when you add the fact that we hit this important zone, rejected it as resistance, and it's a pretty strong rejection of higher prices as we pulled back and broke the last previous low, and then came up and back tested and rejected it again, and then came down and broke this trend once again and came down, that is a good entry signal for a short. The other thing that you want to look at here in these areas is on the RSI, there is a moving average. It takes the average of the RSI and puts it in this line. Above the line is considered bullish momentum, and when we break below it, it is considered bearish momentum. When we back out and look at the chart, you can see that that's a pretty accurate way of determining the health of a movement, because when we start coming down here, the majority of the price action on the RSI is below the yellow moving average. When we come back up, this is only a weak bounce in comparison to this large move, and we just chop around at the line. We get a little bit above it, but then we break down. On the breakdown, the majority of the price action is below. The same goes for this move right here. When you come down here, you'll see the price action came above the moving average, back tested it, and then slowly climbed with the price action. So at the top of this peak, if you're using the support becomes resistance, we had support here, we came, it's resistance here, and we tried to break above it. We failed breakout, came back down, and in this area right here, which is where we had this gap down, we broke below the moving average. And what was to follow? We back tested the major trend right here and then broke down. So that is how we here at Blue Line Trading like to use the RSI. We do not like to use solely overbought and oversold conditions as confluence. We like to use a totality of what the RSI is designed to show you to make good, high quality trading decisions based on price action. The other way that we like to use RSI is to confirm Elliott wave theory targets and wave movements. And I'm actually going to go to the weekly chart so this all fits on here and you guys can see it a little bit better. So this is where COVID dropped the market, and this was a corrective structure in a larger degree, but we have a very clear set of waves right here, and I'll show you how those are marked right now. You have your 1, 2, 3, 4, and 5 to make an entire bullish wave structure. Now this bullish wave structure can be a little confusing, especially wave 1. And the reason why is typically wave 2 will pull back a lot harder than what we see here. So when we come down to the RSI though, we know that we're starting in oversold territory because of this large correction. So we know we are starting a new structure to the upside, potentially. And when we come up, we get very close to oversold territory in this area. And when we come down in our corrective structure, even though we're not coming down very much here, and this is more of a flat type correction, we break the previous low. That is a major clue that what you're seeing here is a wave 2 pullback. But obviously this can come back up and then it can come back down even more. So how do we confirm that we are going into wave 3? Well, typically wave 3 will hold the 40 area on the RSI as support or higher and that typically will confirm that you're in wave 3. And what does this do in this case? The RSI comes back up with the price action, and it hugs the upper line near overbought territory and stays above 40 the entire time until this point up here, which is where the structure ends. So the question you need to ask yourself now is, if it holds the 40 area, which can happen all the way till the end of this structure, how do you confirm where the end of wave 3 could be? Well, one, you're going to use price action and fib targets and whatnot, but remember, the market is fractal. So within this wave 3, you're going to have 5 waves coming up. And to confirm your count, typically between substructure wave 4 and 5, you'll have divergence in here. And there is slight divergence in here. So that confirms that that is the end of wave 3. And then we have a pullback. When we come back up for wave 5, we can confirm wave 5 fairly easily. And the way we typically do that is the top of wave 3 will typically have a lot of bearish divergence to the top of wave 5, and that will add confluence to the target you get. And when we look here, top of wave 3, top of wave 5, there's a clear divergence here. The RSI is making new lows. And as we hit the top, we're making a lot of new lows. And that is how you use the RSI to confirm your Elliott wave targets and structures. If you guys found this video informative or want to see more content just like it, please join our free chat room. There's a link in our bio and on our YouTube page where you can click on it. It'll take you over to our free chat room, which is through Slack. You just create a free account and then you'll have access to all the content that we put out.